Good evening, everybody. This is Michael Filigera from logicalsignals.com, and this is the Elliott Wave update for the NASDAQ 100 for Sunday, March 7th, 2021. Where we left off on going into Friday's trading was that we were looking for continuation of a small bounce, and then for the larger decline to pick up again. Well, it went up there, hit a target, and started to come off, and then it did move down to new lows and stopped on a dime and continued to rally. And it surpassed what I would have then put in as Fibonacci retracements for a rally back up. In fact, it got above that 0.618 level again and kept on going with strength that I have not seen in a while in terms of like the buying, and just wave after wave of large baskets basically hitting the broader markets. Again, a lot of the reasons that they were saying that this was taking place was not necessarily that the world has turned bullish, but it's at a time when 401k money and portfolio managers and fund managers receive their influx or an inflow of money to be put into the market. So it was new money coming in from outside 401ks, IRAs, et cetera, because those contributions are made beginning of the month, and then by the end of that first week, we get to see it coming into the market. They came in as buyers, and they actually were pretty strong, I will say. But what we did see coming in is that it broke above levels it shouldn't have. And that kind of changed the count very slightly. So we had there was a 5 here, and then that's why we were looking for just a smaller rally and then a continued decline. Well, that 5 got pushed out to here. And I've also changed the degree of what we're counting. Not necessarily the structures themselves, just the degree that it's forming. So I backtracked and moved down to count from a minute level. So I'm now to minute, to minor, to intermediate, and then to primary. So we haven't even got to that primary level yet. And last week, I kind of was putting a primary level here and here. And that is what it's kind of like. The size of that primary wave, that's not enough time. So I rearranged the count in terms of degree. So right now we have an intermediate wave 1 here, an intermediate wave 2, and we've begun the intermediate wave 3 decline, which is a part of that primary wave A. So it's A wave that's on the primary level, and we're in a cycle wave 4 decline, a corrective phase. So getting those degrees right is going to help us a lot. So we're now tracing out a primary wave A. Within that primary wave A, I believe it's really forming its own 5 waves down of intermediate degree. And so that's what we're now doing. We have 1, we have 2, we've now begun the 3rd wave down, which again is going to subdivide into at least 5 waves of minor degree. And as we can see in how I've counted, we've gone down to the sub-minute waves. So this is the minute, and that's the sub-minute. So those are pretty, because we're down on an hourly, and then as we get to lower level timeframes, they really need to be counted in this fashion so that we don't lose track of the slightly bigger picture. So these are subs, and that finished, so this is where the change happened. So that finished a minuet wave 3, a minuet wave 4, and then a minuet wave 5, and that then completes minor wave 1. So we're in a minor wave 2 corrective bounce. Within that, we can put some Fibonacci numbers around expectations. Yeah, it's not going to let me do that because I have it all wrong. Excuse me for this. And do me the favor. Come on now. There you go. Thank you. Let me do that one over again. 2825. I'll live. We're going to try to stick that down. 17. 207. There. So this would be, we've got the larger showing us that the potential, it's already reached up to a 50% retracement, which is totally within the realm of reality. But now we've got a B wave and an additional C wave. So inevitably, I believe that if we get that C wave up, which I think we should, then we're looking at 12,900 to 13,000. And likely maybe even a little bit higher. The only thing it can't do, again, it cannot exceed the starting point of where wave one, it can't, the starting point of wave one. So it can't retrace more than all of wave one, let's say. So a wave two cannot retrace all of wave one, but it can go up and equal it, just can't redo it or exceed it. So in any case, but it can get up to 13,000. Now, so this is the A. Now coming back off, we have support at the 50, that is about 12,600, which it's already been down to. Then we have support at the 20, which is 12,560, let's call it. And actually even this should be at like 0.236 of a rally, should also provide support on the way down. So ultimately we could get down here, still rally up and break these levels. So we showed some Fibonacci supports for these here. And we'll do it again on, because I'm going to go down to my lower so that we can see the internals here. And just because I'm going to need to redo them, I'm going to take that one off for right now. And basically look that we have A, then we have B. Now we can put, again, some additional Fibonacci on here. Let me see if I can get this right, come on. Right there. And take that up to the high, which is 61. 61, wow, we'll take it right there. So this would be the support levels coming off. 618, not out of the picture. Now what did we have before? We had several of these levels right in there. 465 and on down. It can get all the way down there if it really wants to before it runs higher. And remember, once it does, and it's proven that it's now going to start a C wave up, the most common is that C is equal in length to A. So we have 2207 to 61. So that would portend to a fairly decent move up, and that's why we had those upper levels that we were talking about. And again, the hourly 50 right now sits at 12,930. So we have lots of resistance in both directions. My anticipation for tomorrow would be, depending on where this ends up, to be looking for that continued downside. And again, form in the structure is going to tell us more than even these levels. So we'll be looking for an ABC down to finish and then a 5-wave rally to begin. And either way, it all is very supportive. Like this, with this, so I'm down on a 2-minute now. So if we're looking at what's happened so far, that could be A of B, B of B, and now we're coming off in a C wave. So we may still end up, I would believe, lower and possibly down to these levels and then get our C wave up. And once that takes place, then we're going to be looking for the 3 of 3 to begin. And that should be promising to the downside. That's where we should start to see some pretty solid acceleration. And you just kind of want to be short. Likely you're going to be able to make money in both directions, because I still think that there are a lot of people that are going to move money in and therefore they got to buy. So we could have great declines followed, or strong declines followed by strong rallies. Let's be prepared for all of them. Trade what's in front of you. Trade with stops. Trade with Fibonacci. Know your moving averages, and have a great trading day. And the next update will be tomorrow.